Well, it's been a little while since we've caught up with Sean Peche, so couldn't have thought of a better day. We just had results last night from Alphabet and Tesla. And he also lives in the UK, where, well, you think our politics is crazy. That place is just all over the place at the moment. Lots of changes going on there. The former mayor of Manchester, now the prime minister, the Financial Times, the Economist saying he talks a good game, but they're not so sure he's going to deliver. We'll find out from Sean whether that is going to help the UK market. Should we be looking there? Because as we know, Mr. Peche has been quite conservative when it comes to US stocks for a while now, but lots to catch up on. Sean is the founder and portfolio manager at Ranmore. I see on your website now, Sean, you are kind of talking to your South African roots, where it says this is how you invest in South Africa as well as the UK. Now, there are not too many UK companies who do that. I guess, is this, you're getting a lot of support from your countrymen?
Yeah, Alec, we market in, we have approval to market in three places: South Africa, the UK, and in Switzerland to qualified investors. And we've had lots of approaches from third-party marketers who've said, "Can we market your fund in Australia? Can we market your fund in the Middle East? Can we market your fund in the Nordics?" And we said, no. We just, I don't want to wake up at 4 o'clock in the morning and do presentations to Australia and spend half my life flying there. So let's just focus on capacity. What we focused on is not gathering assets. We focused on generating returns and creating wealth for our clients. And the two places that are really important to me: South Africa, where I grew up, and the UK, where my children have grown up, and it's our home. So we're going to reserve our capacity for that rather than try and gather assets and spend all our time marketing and less time looking at the portfolio and focusing on choosing the right best companies.
Now, why am I not surprised? You've got this clarity of thought, which is just wonderful, and not gathering assets, but actually serving the community that you already have as part of your community, and it'll grow kind of naturally rather than being boosted. And I like that, Sean. But if you're looking at the AI market at the moment, James Gubb. Do you know James? Have you had
I
much
don't think I've
Excel
met
and Gray as
James.
well?
Yes, no, I haven't met James personally, but obviously I know of him. Yes.
So I did an interview with him this week after he did a really wonderful report on AI. He's basically a very well known money manager here in South Africa who's retired now. He's living in Plettenberg Bay, but he's investing his own money. He said, "I needed to find out about AI. How does AI work? What's this AI bubble and boom and everything else?" And he then went in and did a report which we republished on Biz News. Fantastic. We had a terrific discussion. But his view was that what's happening in AI now is the biggest thing ever in investment markets. And he's read engines that move markets. So he knows all of those stories: the telegraph, as we both do, telephone, locomotives, railways, the whole bit. I'm just wondering, though, from your clarity of thought of looking at this stuff, how do you divorce yourself from this is a huge change in society to we can only invest on things that we actually kind of understand a lot better?
Alec, in all those bubbles, everybody at the time said, "Oh, this is the biggest thing ever to happen." So we don't do that, because the answer, we just don't know. And I think it's a very, very fast moving world. Okay, so if you just look in, I mean, every day there's something new coming out. Look at Kimmy, and I mean, who's Kimmy? All of a sudden, they come out, and they're faster and better models than the other guys. No one had even heard of them, and it's a handful of people sitting in a room, and supposedly now it's got a $60 billion market cap. And so
Well,
these
just moonshot,
Chinese
eh?
models. Hmm?
Come on, this guy did go back from MIT and everywhere else back to China. He was going to be the next big thing in China, so he hasn't just arrived. But anyway, your
No, but
point is
you,
made.
so you take my point that all of a sudden this horse came from this outsider, took the lead. And so what does that mean for capex spending? All of that. So I think it's a great story, but as I wrote in a recent piece, we don't like paying up for great stories because you never know how the story unfolds. And I used the example, I was comparing SpaceX to Pfizer. Great story. It they launched Lipitor. Hundreds of thousands of Americans, millions of people around the world are dying from cardiovascular disease. They had Viagra next. Great story. You overpaid for it. You lost money since 1997. So we don't pay for great stories. We prefer to find the good stories that people are worried about, and we can talk about those, in time. So that's and I think if you look at just the markets, I mean, it's a classic case of rampant speculation. You have this ETF, I wrote about it in last month's fact sheet, and people can read it on our website. But we have this ETF DRAM, which is basically all the memory stocks. Okay, and so everybody, so it's great. Let's go and list an ETF, and what we'll do is we'll put a bunch of memory stocks in here. They did this at the beginning of April. It's $25 billion. With no track record, with a fairly high fee by ETF standards. There are very successful fund managers who have spent their entire lives trying to amass that kind of asset base. And yet here's an idea and an ETF structure, and in 3 months or whatever, it's got $25 billion. Now, surprise, surprise. Okay, it's doubled this year, but it's down 40% from the highs, 28% from the highs. Okay, but halfway through that process, people were like, there's not enough octane in this. Can we have a 2 times leveraged DRAM ETF? Okay. Yeah. So they list in June, they're down 40%. SpaceX is down 43% from the high. Kioxia, down 42% from the high. I've never even heard of Kioxia until it appeared fairly recently, and it's market caps of hundreds of billions of dollars. So there is trust. This AI, it's all very well saying AI is a great story, but it's not a new story. And and I think that's the thing. And if Johnny come latelys have got to be very careful, because if you're one of the people who bought DRAM at the highs, you're down 28%, and he wants to lose 28%. So we prefer, it's the old tortoise and hare story. Get rich slowly. Warren Buffett told us to get rich slowly. That's what we do. We don't race after these shiny, shiny things.
Well, SpaceX, we've got a story here in our own household where Jeanette got terribly excited about SpaceX, bought at 175. Eventually, I managed to suggest to her that not everything goes up indefinitely, and she did sell at 165, and now she's thanking me because the price is 115, and that's all happened in like how many weeks?
I know, and that's with what, 5% free float. It doubles next month. And what happens when so that free float, the percentage of the shares in issue that will be free to trade, is only increasing. Okay. And I think there's an interesting point here. Part of investing is not just about spreadsheets. You have to understand psychology, because markets move because of fear and greed. Okay. And you often hear people talk about, oh, it's in correction territory or it's in bear market territory. And what does that mean? Well, bear market territory, it means it's down more than 20% from the highs. Now, why is that relevant? Well, if you buy a stock and you're down 2%, you shouldn't get too jumpy, because we can all cope with a 2% drawdown. All right. If it's down 5%, you're a little bit frustrated. 10%, you're thinking, what's going on here? 20%. The problem with a 20% fall is you need to go up 25% to get back to where you were. If something falls 33%, it needs to go up 50% to get back to where you were, to get back to break even. And the deeper it goes, the more psychologically impacted the market has. Remember, when stocks are going up, at the highs, everybody who ever bought SpaceX, everyone who worked there was in the money. There was only greed at play. No one had lost money. Whereas now there's some guys who down 40% on SpaceX. And how are they feeling psychologically? Okay, because they bought at the highs. And so that's the point, that all of a sudden, when stocks are hitting new highs, there's only greed at play. There's no fear. But when stocks are hitting new lows, there's only fear. Everybody who bought it's lost money. So anybody who's traded in SpaceX since listing is gone.
Yeah, or who fell over themselves to actually get in the IPO, in the public offer of shares. But a point that you made earlier that I'd like you to elaborate a little bit more on is the narrative stocks. In other words, those who've got a story. And we had one reporting last night in Tesla. I mean, if there's ever been a story, that's the one. The numbers it's been immune really to the numbers for a long time. And I guess SpaceX was all a story. Somebody, James Gubb, called it vaporware. What do you call it?
I mean, I think Bayfat was probably being kind. I have no interest in SpaceX whatsoever. I mean, the point I made in the fact sheet, I think, was that the one day it fell 15%. Okay. That was a $400 billion market decline in the market cap. 400 billion. Just the fall, just a 15% move. That's the market cap of Bank of America. Bank of America make 30 billion in net income. SpaceX makes 18 billion in sales and loses money. Okay. So, I mean, it kind of puts it into perspective. It's crazy stuff. And you need one rocket to blow up on the launch pad. What do you think the stock's going to do? So, like, why do you want to be exposed to that? And I mean, I am totally in agreement with Cy Jacobs. You know, I listened to what he had to say about Tesla. Him and I mean, I think exactly the same as him. That it's just a big game. And the story with Elon, which is quite interesting, is he can't get the current rating from cars because, you know, car sales and yeah, it's just that story is old and European car companies are trade on 6, 7 times earnings. So why you want to pay a crazy number? So they have to move it to the Cybertruck and you have to move it to AI and move it to robotics and move it to full service driving, just trying to keep the story alive to get some sort of hype to, you know, to keep the retail investors interested. So yeah, I mean,
Has there been anyone in history like Elon Musk? Anyone, and I asked this question as well of James, and he said Edison. Edison was similar. He invented a lot of things, but didn't end up well. Have you got any thoughts on that?
I mean, he's an amazing guy, but the problem is how many trillions of market caps. I mean, what happens if Elon has a heart attack tomorrow? You know, does anybody know the CFO is? So why do you want to take that kind of specific risk? So, yeah, I mean,
Let the others play that game. But
they can play that game.
Tesla's results last night. I know it's not a stock that you own, but do you even look at it?
Well, I mean, we've got I always have a look at the big companies and see what they just look at the numbers. I haven't read the conference call transcript, okay, or anything like that. You know, I just look at this and it's got a $1.4 trillion market cap, and they've had 2 rolling years of declining earnings per share, and operating income is down 15%, and it's on a 0.4% free cash flow yield. I go, well, why would I bother reading the results? So yeah, I just can't see how you can make money in Tesla from here. Now, they might pull a rabbit out the hat, and I know Elon specializes in pulling rabbits out of hats. And maybe there's something with SpaceX, and they try and do something and get the passives to buy SpaceX because the big S&P 500 passives are not in SpaceX. And so I'm sure there's some sort of corporate activity that is going to take place to try and get those guys on board. But, you know, that's not how we invest. So that's why we're not going to participate. We're not out there trying to guess what other people are going to do.
Cy Jacobs has been outspoken as well on his resistance towards the Elon Musk story, and he's been calling Tesla the best or the biggest short for a long time. But changing his mind recently and saying, "Oh, you can't really fight the market. Leave the market. I'll stay on the sidelines, and that's fine." But last month in the BizNews portfolio, Sean, we sold Tesla at what now looks like a very good price and switched into Adobe, a company that had been hammered for a long, long time. And I'd like to get your thoughts on Adobe in particular because it's popping up in your portfolio.
Well, so Alec, yeah, we actually do have a small position in Adobe, and 1.5%. You know, we just think this world is a fast moving place. It's hard to have absolute conviction about what the future holds. And that's why we don't have big positions, and we don't need to have big positions as a global fund. There's lots of opportunities out there, but we do like to look for opportunities in places where other people are fearful. Okay. And that's, you know, is it unique? No. Warren Buffett said, be greedy when others are fearful. So let's go and see, where are people fearful? Well, people are fearful in software. So in the software space right now, a lot of these stocks are down a lot. And the idea is that, well, AI is going to kill these guys. And I'm sure it's going to hurt some, but I'm sure it's not going to hurt all of them. And so we've been picking through the bones of some of the software companies. And, you know, what's interesting, so there's a fear that AI is going to hurt them, but is it a fact? You know, have we seen user numbers and subscription licenses decline? Have we seen revenue fall? Have we seen deferred revenue decline? Those kinds of things. Is that what's happened? No, it hasn't. All right. So that's what's interesting. Now it might still happen. Remember a year and a half ago, Alphabet was very out of favor because everybody said AI is going to kill search. And we went and had a look and we thought, well, we've seen no evidence. We might be searching ourselves a little bit less. But of course, the insight you had to make was that when you look on an AI model, one of the things the AI model is going to do is quickly have a search to see what's out there, because these AI models have been trained on historic data and they need to check that there's nothing that's happened since then. And so part of their stuff is to search. So anyway, we took advantage of that and we bought some Alphabet and we've since sold it. And we sold it way too early, which is normally what we do, which is fine because we can reinvest in other opportunities. But right now, there's a lot of fear in software. And when we look at Adobe and say, well, look, this stock is the same price as it was 10 years ago, and yet earnings are up fivefold since then. And actually, revenue growth accelerated last quarter, and they've got 40 million subscribers. And they invest minimally in minimal capex demands. So, which is a very different story from the likes of Alphabet, and they buy back 1.7% of shares and issue a quarter, and they've got $25 billion buyback, and everybody's terrified because there's 13 buy recommendations, six holds, six sells, and 25 holds. So it's out of favor, and I've got a 9% free cash flow yield. Now it could change tomorrow. We could see in the next quarter's results that actually no subscriber numbers are down and revenue is declining and all the rest. Well, then we'll probably take a loss. But if the fear abates and actually people think, you know what, these AI is going to help these guys cut costs, it's going to give them an extra thing to sell their AI model. Well, then you could get some nice upside. So that's how we think about Adobe. But am I pounding the table saying you must put a huge percentage of your portfolio? Yeah, no, not at all. And in fact, I should have said at the start, compliance officer will shout at me, none of what I give is advice. I'm just telling you what we think, and nobody must take this as gospel because we can change our mind tomorrow.
And that is why you're an active portfolio manager. You do that. You do change your mind. You see the facts on the table as they are, and then adjust accordingly. But last
As
night,
did Sai with Tesla. And I think you have to be flexible. It's a good fund managers, and Sai's outstanding. They are flexible because the futures, all you got to do is make sure the odds are on your side and get more right than wrong. And when you get them right, win bigger than you lose. And then you'll do well. But the people who go down with the ship, they tend to, we want to play 5-day test cricket here, not IPL cricket trying to slug a six off every ball.
tell me about Alphabet's numbers last night and your read of them.
Yeah, so my read, well, the first thing is the capex. The capex is off the charts, and that meant that they got plunged into negative free cash flow. And this is the second quarter in a row where they haven't bought back stock because of the capex demands. In fact, the quarter prior to those two, so 3 quarters ago, they only spent half what they normally did buying back stock. And in fact, they issued shares. And so here you have what you think is a very profitable business. And make no mistake, operating income was up and sales are growing and it all looks wonderful. But they are investing a lot, and they're investing. I mean, to give you an example, I think they spent 44 billion in the latest quarter. Depreciation for the whole year, so the last 4 rolling quarters, is only 25. Okay. Capex is 40% of revenue. That means you've got to pay 40% operating margins just to pay your capex before you pay your staff or anything like that. So, and there's no certainty that this capex will convert into great earnings because it's an arms race and everybody's trying to spend and all the rest. And yes, they did well on other income, stake in SpaceX and Anthropic, but SpaceX is down 30% since June. And who knows if Anthropic's even going to list? I mean, we know OpenAI is has deferred their listing because they're getting, I guess, beaten. If things are going really well, you list, and you're deferring while you're trying to plug the holes. So who knows? But yeah, I look at this and I go, 33 times historic earnings when my cash flow is lower. I've got a 0.4% free cash flow yield. Why would I go there? And you'll recall, Alec, one of the first things I ever wrote, it was about Naspers and Tencent. way back in 2018, and BizNews published it. And I never thought that we would buy Tencent, okay, ever. And yet here we are buying Tencent. And if you compare Tencent, I think this is quite interesting. You compare Tencent, which is in social media, search, ads, games, fintech. It's on 13 times earnings, and you know, Google or Alphabet's on 33 times earnings. It's not far off the 2018 price, and earnings are 3 times higher. It's a way better business now than it was back then. It's more diversified. Fintech's a bigger part of it. They far more disciplined on the capex. It's positive free cash flow. And I look at this and I go, well, do I want to own Tencent on 13 times? Or do I want an Alphabet on 33 times? And the one is free cash flow generative and the other one isn't. And the one is the same price as it was, 8 years ago, and earnings are 3 times higher. We'll buy that. So we've actually got Tencent in the portfolio.
It's so interesting talking to you, and I think that the guys who are investment chaps just love this, and I think that's why I have rapt attention. But let's just unpack it a little bit. When you talk about free cash flow, in other words, it's not no longer Google with all these fabulous businesses is not making the free cash flow anymore that it can use to go and buy back its own shares and maybe give to shareholders, but it's actually betting the farm and more on the future, which is not very certain in anybody's minds. So might they be doing something of what Mark Zuckerberg did with Meta, where he bet on a future which turned out to be very imperfect with the metaverse, VR, virtual reality, etc. Do you think there's any risk of that, or are you just feeling that they're overdoing their investment into it at this point?
Um, I mean, they're certainly, they're issuing shares. They've gone from buying back shares to issuing shares. And I have to say, I was quite surprised that Berkshire Hathaway was buying at the top. I thought, oh, well, yeah, what happened to be greedy when others are fearful? Isn't this time to be fearful when others are greedy? But anyway, and where was Berkshire Hathaway? Why didn't they buy when everybody thought search was dead? What happens? Here's an interesting point, Alec. What happens if AI does start affecting search? If it was, that was the fear and it's just taken longer to come through. Well, now what's going to happen? Then you've got a declining business. And I think a very important point is this. If you want to value these businesses, you must either value them on accounting earnings or you must value them on free cash flow. Well, the free cash flow is negative. If you want to value them on accounting earnings, well, you got to know that depreciation is going up because today's capex is tomorrow's depreciation. Okay. And if depreciation is going up, well, what's that going to do to future earnings? And what happens if depreciation goes up and then AI starts affecting search? And remember, these cloud businesses in the US are quite profitable. They're not profitable in China, much more competitive in China. So, and I think China, there's an interesting mood swing that I'm sort of seeing. I know people historically have said, "Oh, China's uninvestable," and I've been on Biz News saying, well, actually, well, I can't remember. I said it on the, or at the presentation, where actually I think in many cases, America's more uninvestable than China. And if you look at it now with the AI and what Xi Jinping was saying the other day in terms of this is like you're kind of moving towards open source and this is a resource that the world can use and all the rest. Maybe there's an opportunity to switching from US technology into Asian technology. And yeah, I mean,
So we might be on the same page when it comes to process, perhaps.
well, I mean, and you know what? That's a very interesting point because think about process. They're right there. They had all this money. Right there in the IT world. They've had all this money to spend and invest in the next new shiny thing. And how many have they got right? Okay, not much. Where's their AI chips? Where's their, think about the big things and that's the point with technology. You know what? Here you got Kathy Wood. Well, we're her NVIDIA shares. She sold NVIDIA shares, and she's a supposedly technology expert. And the point is, that's how hard the sector is, and that's how fast moving it is. Where you've got these supposed experts right in the weeds of things, and not even they're picking the winners. So, what chance have we got? And the future's uncertain. Don't pay too much for it. So so that's why we're not paying too much for it. We've got a better business in something like Tencent. So do we want to go via process? Well, I know in South Africa you can't go directly into Tencent. As a global fund, we can. We don't want extra layers of costs, and we don't want extra throwing money at loss-making businesses and all the rest. We'd rather just we'd stay pure and so go directly.
Sean, I did promise in the intro that we'd talk a little bit about the UK. That's where you're based. And can you give us your thoughts on what's happening with the new Prime Minister? And indeed, does that give you any confidence to invest in UK stocks?
Well, I mean, Andy Burnham, it's all happened rather quickly. A bloodless coup, I guess. And we don't know. I'm glad Rachel Reeves is out. I think there's been a lot of damage done to the UK economy in recent years. We've had things like the changes. I mean, just our inheritance tax rate here is 40%. Okay, our capital gains tax rate is 24. So in South Africa, it's 25 as inheritance tax rate, and capital gains is lower. So actually, you guys are quite lucky over there. You don't want to die here in the UK. 40% is high. And what did that do? Well, they changed the rules such that people who were living here as non-domiciled people were going to be caught in the net. And so what did they do? They all left. Okay. And what does that mean? Well, you've got fewer very wealthy people eating at restaurants, staying in hotels, buying houses, etc. So you haven't had that multiplier effect. So it hasn't been very friendly to wealthy people here, or less friendly, and the world's a competitive place. So those wealthy people have gone to Italy and Mauritius and islands and Spain and places like that. So there's a lot of competition for that. So I hope he's going to be more friendly towards that space, and also towards certain businesses. And I see this morning they are changing the business rates or reducing business rates for the hospitality sector, which I think is a very, very good move. So let's see. I'm more hopeful than I was. I think Keir Starmer was a good person, but I don't think he was a great leader, and he didn't have a plan that he sort of echoed, other than trying to take more from a certain portion of the population. So we'll give him the benefit of the doubt, but it is fast moving. I mean, a few months ago, and I guess this, Alec, again, it's like how different the world is going to be from what you thought. A few months ago, everybody was fearing Nigel Farage was going to be our next prime minister. Now it looks like he could actually get bounced by someone called Count Binface in a local election. Okay. And if he is, well, then he's not an MP and the Reform Party falls apart, which actually I don't think would be a bad thing at all. So, so it's amazing how the future, a year ago, Zelensky's getting roasted in the White House and everybody thought Russia had the upper hand. Now, half of Russia's refineries on fire and the place is falling apart. And China is saying, we'll only pay your domestic gas prices. So Russia doesn't have the upper hand and Ukraine has the upper hand. And so that's the thing. The future always turns out, or quite often turns out, to be different from what you expect. And so the key is not to pay too much for those expectations, because if you're wrong, it's a problem. Now, the good thing about stocks is that when you get that environment of fear and you get uncertainty, okay, it creates opportunities. And so this month we've had, it's been a top 10 holding for a little while, but now we've sold it all. We had a bid for EasyJet. And the Iran war, unfortunately, we were buying it before the war. And then in the depths, we carried on buying it. And now the price is like 100% higher. I mean, it's double what it was in the depths of the war. And so when you get, and there are a couple of private equity companies bidding for it. Now, it might go through, it might not, etc. Well, we've taken our money off the table and are going to reinvest it. But the point is that when you invest on a top-down basis, we don't want to go to the UK because we don't like what's happening in the politics. Well, that creates an environment of opportunities for guys like us to go and hunt through and find those companies which are being unjustifiably sold down. And then you can buy EasyJet, and then it gets bid for, by private equity, and all of a sudden there's a nice uplift to the fund because it benefited from a 40% premium, take our premium. So there's always opportunities. So don't get too negative out there.
Sean Peche, founder and portfolio manager at Ranmore. I'm Alec Hogg from biznews.com.
healthcare matters, but what matters most?
Having cover for the people who keep this business going.
Bonitas is there for you when it counts. Bonitas, medical aid for South Africa. Visit bonitas.co.za and find your plan.
Start your day a step ahead. Biz News Insider. It delivers the business stories that matter every morning straight to your inbox. Sharp, fast, and free. Subscribe now. In uncertain times, good information is priceless. The Biz News Conference is heading back to the Drakensberg. Join me, Alec Hogg, from the 11th to the 14th of August for BNC 9, Champagne Sports Resort, where it all began, and where our community gathers for honest conversations, smart investing insights, and direct access to some of South Africa's sharpest minds. Come and rub shoulders with the best we've got. 28 keynote speakers, 3 days. Seats are available now. Book your seat by clicking the link in the description.